Yo, back again, man, with this video. And today we finna discuss how to grow a small account and risk management and how you should be looking when you take setups, what you should be looking for as far as risk wise and how you grow your small account to a big account or you manage your money. And I got everything written down so that way y'all can look at this and see this shit and all type of stuff. So the keys to growing a small account when you first start off. Anything under like 5-10 racks is really like considered a small account. A big account ain't really big until you get around the 50K, 100K range. That's considered a big account. Anything above 100K is really a big account because that's what most profitable traders usually play around with. But as somebody who's flipped small accounts before from $30 to thousands of dollars, or you know what I'm saying, $100 and a couple thousand multiple times, I can say that when you have a low amount of money, it's definitely harder for you to gain a lot of money. You have to be more skilled, but it's not impossible. It's the same thing as flipping 100K. It's just you have to risk a little more when you first start off small, because you just don't have enough money to play with. The more money you got to play with, the better, because you have more cushion, you have more breathing room, and the numbers look so small when the numbers are small. So you tend to like want more because the numbers are so little. But when the numbers are real small, taking your money is the most important thing. So I'm gonna discuss what you should be doing when you're looking to manage your risk and grow your account and scale your account up, because this is important. Risk management is literally the most important thing in trading, so you don't blow your account and you don't over leverage and lose all the money on your profits that you made. So we're gonna go over having $100, around $100. It's a real baby account. The first setup you take is gonna be the most important trade you take. The most important, because that first trade you take, you're gonna have to risk almost damn near half of that account, or if you really ballsy, the whole account, most of the whole account, because you have to get out of that hump. You have to get, como dice, you just gotta get up out that, man. You can't be stuck at $100, boy. You just, you know. So it's not enough. You know what I'm saying? But you can do it. But what I'm saying is, when that first trade is the most important. The first trade, from when you start off at $100, you're gonna have to risk about 30 to 40% of the account. So $30 to $40 first trade, you're looking for 1 to 4s plus. If the market give you a 1 to 3, 1 to 2, and it gets to a certain zone, a level of buyers and sellers, bro, you just take your money, take your 1 to 2. But when you start off with the $100 account, you're gonna have to risk most of the account until you at least get to about $500. $500, about $300, $400, $500, and then you just risk 10%. And so just do $50 each trade, and you're looking for $200, $250 plus each time you place a trade. The reason that's so important is you want to give yourself 10 to 20 opportunities plus before you blow your account. Meaning, if you take 10, 20, 30, 40 trades and you take all those are L's, you want to be able to take 20 L's before all your money's gone, or 30 L's before all your money's gone. If you take 20, 30 L's in a row, you should, you know what I'm saying? You should have some cushion in your account so you can take some L's. Honestly, if you're taking 10, 20 L's in a row, 30 L's in a row, you're garbage. You should stop. You should put away the live account and then switch back to a demo account and then go back to the drawing board, because there's just no way you should be losing 3, 4, 5 times in a row if you know how to trade. If you're losing that many times and you have a losing streak, then that just means you don't know what you're doing, and you need to take a step back and think about your life for real, and lock in. So the key is 10, 20% of the total account after you get over the hump. But most of the time when you start off with a small amount like $100, You need to be risking about 30-40% of the account, or the account is just going to grow slow, because 10% of $100 really is only $10. So if you get a 1 to 4 plus, you're looking at $40, $50, $60, and that still just only puts you at 160. So that first trade is important. That first setup is important. It needs to be A1 when you have a small account. Now, as soon as you grow that account to 500, then you can risk about 50 a trade. That means you can lose 10 times. I mean, yeah, about 10 times before you blow that account, and you just rinse and repeat it. It's the same thing over and over and over again. It's the same way you scale $100 into 1,000. It's going to be the same way you scale your 1,000 into 10,000. It's going to be the same way you scale your 10,000 into 50,000, and 50,000 to 100,000, and your 100,000 to $1,000,000. It's all the same thing. It's rinse and repeat. With that being said, is you always want to risk the same amount each trade until you get some wins under your belt. So I go by the 10-20 rule. So I take about 10. I give myself, I'm risking about 10 or 20 setups worth of capital each time I place a trade. So I know if I take 10 L's in a row, my account's blown, I'm cooked. But it just depends on your skill level. If you're ass, straight garbage, then you should be doing 10, 25, I mean, not 10. You should be doing about 20, 30 trades. You know what I'm saying? Usually my rule of thumb is however much is in your account, just divide it by 30 or 20. You know what I mean? It's all percentages. Everything is percentages. When you grow a little money into a lot of money, it's really the same thing. The candlesticks don't move any different. Nothing changes, just the numbers on the screen. Remember, everything you're trading is all digital money. Money's not really real. These niggas are printing this every day, and they're putting it on your screen. Like, most of the money you even get in your bank account, or you're seeing, it's all e-transfer. Like, like everything is all digital. Like, stuff that people have created, it's all digital. So like, it's you shouldn't be too nervous about risking a lot of money or playing with more money, because it's the same thing as playing with $100. It's just the numbers, just add a comma and an extra digit or a figure to it. So it's really the same thing. So how you scale from 100 to 1,000 is the same way you're gonna scale from 1,000 to 10,000. But the more money you get, the bigger your account gets, the easier it really gets. Because if you choose to risk less, meaning percentage wise, 1% of 100,000 is $1,000 a trade. If you get a 1 to 3, 1 to 4 plus, you're making $3,000 or $4,000 a trade, meaning $3,000-$4,000 a day or every other day, depending on how many good setups you take. And remember, sometimes the market is gonna give you a 1 to 5, 1 to 10, 1 to 15, especially if you got good entries. You know what I mean? So every time you take a trade and you're setting up your lot size, and depending on where your stops need to be, you need to be risking the same amount each trade until you get some more money under your belt. So meaning, if you grow the account to $1,000, right, you supposed to risk about 10. You're supposed to risk 5 to 10% per trade. So you're looking for 10 or 20 trades before you blow the account. So if at $1,000 you risk $100, you're looking to make $400 plus. Or if you're doing $50, you're looking to make $200 plus. Remember, if the market gives you a 1 to 1 or 1 to 2 because your entry is bad, or the setup you take is just, you know what I'm saying, pretty terrible, then you just take what the market gives you. Like, it's okay to have a 1 to 2, 1 to 1, 1 to 3 if you get in real late. But like I said, most of the setups that you take, you're supposed to be looking for an overall move. So you should be getting rewarded for your efforts for sure, especially the way I'm showing you. So you'll do $100 a trade. You get a 1 to 4, 1 to 5 plus. Let's say you make $500, and you make a $500. Now your account's at $1,500. If you choose to risk a little more, then go for it. But try to gain some more W's before you start risking more, and slowly progress and start risking more, just depending on how good you are. Because you don't want to make $500 and then be like, all right, I'm gonna risk the $500 I just made. Why would you give your profits back? No. The whole point of risk management is, if you're risking $100 a trade and you get a 1 to 5, now you have 5 more trades before you blow that account. You get what I mean? So you want to give yourself more headroom, like knowing if you take a L, you're going to make 4 or 5 plus times that back. So taking an L should never be a worry for you, because you know that you have so many opportunities in order to make up for that. Because if you take one L, it's not a big deal. If you're risking $100 a trade, you take one L, you lose $100. The next trade you take, the next setup you take, because after you take a L, when you take a setup and you take a loss, you don't trade for that day anymore. You're only taking one setup. You should only be taking one setup. One setup. You shouldn't be taking 2-3 trades, getting in and out. No. You get in a trade, you let it play out. Get in the trade and you let it play out. You either let it hit your stop loss or your take profit. If you don't know how to trade, then you need to be learning some more. You don't need to be trading real money if you don't know what you're looking for. You're just killing your own capital. And I know you ain't, you know what I'm saying, if you just learn how to trade, I know you ain't trading like I know you ain't trading online income. You're trading hard-earned money where you just went to work for, hourly income that you traded your time for. So why would you put your timely income at risk when you don't know what you're doing, when you can just be patient, learn the skill, and then you can turn that money that you earn, put some money to the side, and then you can, play with that when you know what you're doing, and then now you can flip all that money. You don't really need a lot of money to make a lot of money, but it's preferred for you to have a little cushion when you're first beginning, so that way you're not stressing. You don't ever want to be trading money that you need, or because remember, anytime you place a trade, you should be looking to lose that money, even though if you're not going to lose that money, right? You should only be risking what you're willing to lose. That's how trading works. So if you're not willing to risk what you're willing to lose, then you don't risk that amount of money. But this is why risk management is important. This is why risk to reward is important. So 1 to 4 is 1 to 5 plus. The market is going to reward you, so holding your trades is important until these take profits or to these zones where buyers and sellers are sitting at, because you know that's where price is going. And I've showed y'all that price does this over time and time and time again, and it will continue to do that time and time and time again. I took a gold setup today, hit my profit, hit my TP, price went smooth, gold went stupid. Took about London session and New York session, the whole London and New York session to play out. You know what I'm saying? I let it do its thing. I held that trade for a good 10, 15 hours. That's fine. I can go do some other things while I'm holding my trade, and I just keep an eye on it and see what it's doing. And if I feel like I can add more positions as it's going, then I would do that if it's going in my favor and still creating that structure that I'm looking for. So, the more money you get, then the more money you risk. Let's say you start off, you had 1,000, then you take a couple W's. Let's say you make $500, you take about 3 W's back to back to back. Now you're at $2,500. Now that you're at $2,500, now you can up your risk to like $150, $200 if you want to be a little more. You know what I'm saying? But you don't want to get too overly confident when you start taking all these wins and all that, and just start taking dumb trades. I used to do that a lot. And then blow the money that I just made. Like I'll make a couple grand, make some thousands of dollars, and just lose it because I'm getting too cocky or I'm not waiting on my setups. So when you start making some money, it's important that the more money you make, the more cautious you are of your trades, because now you're playing with more money, so you're able to make more money. You know what I'm saying? So it's easier when you have more money. So that being said, you want to take some W's before you start risking more bread. You want to give yourself 10 to 20 opportunities before you blow the account more if you're not too confident yet. Don't be risking 5 or 10% of your account. Remember, everything's percentages. So don't be risking 5 or 10% of your account and you're not willing to even play with it like that, and it'll make you nervous. You know what I'm saying? You got to grow up to it. Work your way up to that. So let's say you get to $10,000. The same concept applies with every amount of money. $10,000, 10 or 20 trades, 5 or 10%, maybe less if you okay with, making or risking $500 to $1,000 a trade. Now when you get to making $4,000, $2,000 plus, bro, you're making more than a doctor. You're way above average. You walking around with dog shit in your pocket, boy. Yo ass, you know what I'm saying? Nigga, your ass is, yeah, you flourishing, boy. You might be in the club throwing, you know what I'm saying? You buying dumb shit. You throwing bottles everywhere. Once you start making 2,000, 4,000 a day, boy, your ass gonna be in the club tweaking. Like, I got more money. You gonna be flexing, you know what I'm saying? Buying shit. You gonna feel like the man. Calm down, nigga. Calm down. You know what I'm saying? It sounded good, didn't it? But calm down, fool. You know what I'm saying? Calm down. You still gotta make that million. You still gotta get the millions. You know what I'm saying? You can't get comfortable and start doing dumb shit. Lock in. You still gotta get, you know what I'm saying? Remember, the whole point of trading is to build generational wealth and change everything. That's my whole goal. To be multi-million. I'm trying to be a billionaire type, you know? That's just how I move. I want to master everything. Like, that's just how I think. That's how my mind works. So, when you start making 2,000, 4,000, remember, you're trying to scale your account up to where $4,000, $2,000 a day is, that ain't nothing, you know what I'm saying? You can blow that, you know what I'm saying, on anything, you know? So, you want to keep scaling up. Don't start making a little money and then start overly doing it. So everything applies the same way. So once you even get to 10,000, it's gonna be the same way when you get to 50,000. You're gonna be risking 10 or 20 trades, maybe even less, because now when you're risking a little more money, so your profits are a little more crazier. Now you're risking $2,500 to $5,000 a trade, and you're looking to get 10,000 plus, $20,000 plus. Remember, the bigger your account gets, your percentage is going to drop, because 1%, like I said, 1% of 100,000 is $1,000. 1% of $100 is $1. What you gonna do with $1? Exactly, give it to a homeless nigga so he can go get a McChicken or something. Like, you know what I'm saying? So the more money you start making, your risk is going to increase, but you still got to go by percentages. Trading is a percentage game. How you grow your account is all percentages. You want to keep doing the same thing over and over and over and over and over again. You don't want to switch the plan up. Once you know how to read the markets, once you know how to read zones, once you know how to read candlesticks, once you know what you're doing, once you got the patience down, once you got the not over trading down, taking one setup, once you take one L, you get off the fucking charts and wait for another setup, and you wait till all three of your confirmations, everything gets confirmed. Once you master all that, you have to master all that. And if you hear one thing and it goes in one ear and out the other, you need to be rewinding those videos and asking yourself, or doing your research and seeing what you need to be understanding more. If you don't understand something, dude, YouTube is free. ChatGPT is free. Like, bro, do your research. Don't sit there and like not understand something and don't try to understand it. Go watch some videos, bro. Put the time in. You have to put time into trading. It's not getting rich and all that is not given. You have to go earn that. You know what I'm saying? If you wasn't born wealthy, you wasn't born with rich parents, you know what I'm saying? Like most people, nigga, you gotta go get it. Like, you can't sit there and play victim and act like a little hoe and bitch up and shit. You know what I'm saying? Like, bro, you gotta chest up, nigga, chin out, nigga. What nigga trying to do? You know what I'm saying? Like, you gotta be that nigga in order to, you know what I'm saying? You gotta do that. You gotta take care of your health. You gotta take care of your finances. You gotta hustle. You gotta grind, nigga. You gonna lose sleep. You gonna lose sleep. It just is what it is. So let's say you get the 50K. Boom, you have 50K. Now you're risking about 2,500. Maybe you don't want to risk 2,500 a trade. Maybe you just want to risk 2,000. Maybe you still want to risk 1,000. That's fine. If you want to have 50 opportunities before you blow your account, or 100 opportunities before you blow your account, once you get to like 50,000, 100,000, that's fine. It all depends on you. But you're only going to have those $100,000, $200,000 days if you risk a little more money. You have to risk money to make money. That's how trading works. So it's important that you master the skill and you master your risk management before you try to scale up, bro. If you can't scale $100 into $1,000 and you get to 1,000 and you just fucking do some stupid shit, you're never gonna get to 10,000. And then you're not going to get to 10,000, and then you're not going to get to 50,000, you're not going to get 100,000. The same way you get from 100 to 10, 100 to 1,000, 100 to 50,000 is the same way you get to 100 to 1,000,000. It's all the same thing. The candlesticks don't ever change. Everything moves the same. So you have to really lock that in and dial it in. But that's all for risk management. If you need to take a picture of this, bro, even ChatGPT it. If you want to ChatGPT, hey ChatGPT, like I said last video, how do I turn $100 into $1,000,000 within 100 trades, or within 50 using a 1 to 3 risk to reward, or a 1 to 4 risk to reward? How much do I have to risk? You know what I'm saying? And it will give you a whole chart. Like, nigga, everything is, bro, you got access, nigga. It's 2026, bro. You got access to everything that will give you answers. So if you still thinking like, how do I do this, and you can't ChatGPT it or YouTube it or go search it up yourself, bro, you ain't trying. You just being lazy, bro. But that's pretty much it for risk management. I just want to go over the markets while I got y'all here, and talk about yesterday what I called. I had called gold. I took some gold buys today. My first entry was right here off this. I took this setup, and I told you in the last video, I took this setup. It was a little baby setup all the way to this zone. So it was a little baby setup. Took that, took my money. And then once I seen price break this level of sellers, I entered again. Took this setup last night. If this will go, boom. Took this setup last night. Remember, price, I told you when price is going to only reverse at a level of buyers or a level of sellers. I want to tell you this. When you're selling or buying, you do not, repeat, I repeat, you do not you do not buy at a level of sellers unless that level of sellers gets broken. If it's bullish, you wait till that level of sellers gets broken and it creates a higher high and closes above this zone and then creates a higher low before you take a buy. Other than that, if price never broke this zone, I'm not taking no buy setup where a level of sellers are at, and you don't want to take no sell setup at a level of buyers at, because you'd have took a sell right here and you know buyers are right, bro, you're gonna get reversed on. You gotta think the zones matter. So if buyers are sitting here, I'm not taking a sell on a level of buyers unless it breaks this level of buyers and creates a lower high. If it doesn't do that, then you don't take that sell. You wait and you see what price is doing. Be patient. Just wanted to throw that in there, because do not be trying to fucking sell at a level of buyers, and do not be trying to buy at a level of sellers. It's the opposite. You want to buy at where buyers are sitting at because you have a higher probability on getting an A1 setup. You see, I got in right here, I got out right here. And I waited for this level of buyers to get broken, and I waited on a confirmation of a higher low being formed. Once I seen this higher low being formed, I took price up all the way to the zone that it's at. I didn't really get out at this zone that I had marked up, because me personally, if price gets around to where that area is, I'm not finna be greedy. I'm just finna close my trade and take my couple of bands, or however much I make. You know what I'm saying? A couple hundred, 200, 300, 400, 500, 600,000. It just depends. It just depends. You know what I'm saying? I'm taking my money and then I'm letting the market do what it do, and that's pretty much it. But gold is bullish right now, as you see. It was bearish right here, hit a level of sellers, switched the structure, hit buyers. You know what I'm saying? Broke a lower high and created a higher low. I entered, took that there. Price created another higher low. It really never broke structure, so there was no reason for me to get out. I could have really just held this trade, just added more positions. And then I took this setup, got in right here around this zone, and then right when price was breaking out, I entered another position. So I had two positions on this on both of my accounts. And then I rolled price up to around this level where it's at right now, or a little lower. And then that was it, man. That was the end of the day. It just played out throughout the day. It took a little minute, but when you're trading on the higher time frames, that's just what it does. I talked about Bitcoin yesterday. Remember how I said price can be in a no trade zone off these two areas? Price broke, created higher high, higher low, created a equal high. It kind of looks like a higher high. Broke this higher low, but remember, when price is at a level of buyers, price has to break the previous low, the lowest level of a higher low, and because if it doesn't do that, then price is really not going to sell off. Price will have to do this, break that higher low, and then it will have to break this zone first before I want to take that sell setup. If it's bouncing off of two zones like this and this, I'm not taking no setup until I see where price actually wants to go. I am not trading a what if. I am not trying to fucking guess the market. I'm literally simply reacting to the market. So now that price created a higher low. Didn't I say sometimes in consolidation zones, price will either create higher lows, higher lows, higher lows, and show you what it wants to do in consolidation zones? This is a good example. Look, created this, bounced off here. This is where first buyers is, another higher low, and another higher low. Either none of these higher lows got broken, so buys would still have been valid. I could have still took a buy setup just based off this higher low being created, but I was in gold buys. I'll take multiple setups if it presents itself, but I really wasn't paying attention to BTC. But now that it's breaking out of this zone, I'm looking for it tonight to create a higher high, and I'll be waiting on a higher low before taking price back up to this level. Okay, so with USD JPY, I was talking about that. Also, price got to a zone where levels of sellers were sitting at. It didn't tap into here. If I go all the way right here, no, let me go on the daily time frame. If I go all the way to right here, sometimes I'd be telling y'all, sometimes price will not tap into all the way into a zone. It'll sometimes tap into where price had broke out of a zone. So it just depends on the market and what it's doing. Let me see if I can drag this. So it'll tag into where price kind of broke out of a zone. And as you see right here, if price will show, price had just tapped into where price had broke the zone. It didn't want to tap into it. Instead, it created a lower high at that zone, and then we had a reaction. Like I said, price do not be perfect, bro. Sometimes the zones do not hit the place where you want it to hit, and that's fine. As soon as you see it around that relative area, nigga, and you see it consolidating, bro, just get out. Just get out and take your money. So you see price break this higher low. Once it hit this level of sellers, it broke a higher low, created a lower low, then a lower high, and now it's dropping. You know what I mean? So, like I said, market structure, it follows it down to a T. It gave you one confirmation, a break of a higher low, and the second confirmation, a lower high. I mean, a third confirmation, because the first confirmation was got to a level of sellers, didn't want to pass it, broke a higher low, and created a lower high. This is a valid setup. I would have took this if I was paying attention to it, and then I would ride it down to probably this level right here and see how it reacts off here, if it wants to create another higher low, or if it wants to break this higher low and keep going and break this level of buyers, because buyers are sitting here, price got higher. You know what I'm saying? Price can still create another higher low, because sometimes at a level of buyers will get more money. They'll take their buys up to sellers, and then price will come back down, and it'll create a higher low, and then continue to go back up. It just depends. Like I said, you gotta look at the market for every single which way, and then you see how it reacts after it gets to a certain level, and then you just go from there. But I just wanted to break down the markets at the end. I hope that really helped your risk management, because that's really the key. That's the real key into staying consistent and profitable is risk management. Do not over leverage. Do not over leverage. Risk the same amount, use the same lot size if you have to, until you get some more money, and then you risk a little more. You know what I'm saying? Don't get too bold because you think a setup is nice. Like, don't get too bold unless you're ready to get set back, because you don't want to lose a large amount of money and then trying to make that money back and try to chase the money back. You don't ever want to chase the money. Look at that. But that's pretty much it for today. I'm out here. I'm out of this beat.